screen here. I created this Wealth Navigators forum really as a opportunity to get together like-minded individuals, those that want to think outside of the box and think outside of what Wall Street has really programmed us to believe is available to us and what we should be gaining from investments. I've had a lot of folks who have wanted to get their friends and family involved, and this is a great forum to invite your friends and family to learn and be educated and ask questions on the space in real estate. So I want this to be really interactive. If you haven't noticed, I've been asking a lot of questions. I want to be really active in the chat, but please also feel free to unmute yourself, interrupt me, and ask questions as we go through this. I want this to be conversational. I'm hoping that this will be a 25-minute kind of educational lesson that I'm going to share, and then we'll open it up for Q&A at the end. But I do want these to kind of be short and concise and really just be value packed. But before we dive into it, I do have to put up a disclaimer. Because of what I do is highly regulated by the US Security and Exchange Commissions, we do always need to put out the standard disclaimer, securities disclaimer, that basically just says that I am not an accountant, I am not a financial planner, I am not an attorney, I do not give legal advice, investing advice, or tax advice. What I will share is my experience and the experience of folks that have invested alongside me. And know that this webinar and the material that I share does not constitute an offer to sell, nor is it a solicitation of an offer to buy security. So I will not be selling anything. I will not be pitching anything. It's really a safe place for y'all. So why are we getting into hard assets? Why did we decide to go into hard assets? We really started to diversifying out of the stock market because we wanted to invest in assets that were designed to perform regardless of the economic conditions. We were tired of worrying about the standard of our standard of living really being compromised by the corporate decisions that were outside of our control. So when we looked at our own personal experience and what we could control in the stock market, we found it nearly impossible to predict the performance and the ups and downs. And it really felt a lot like a stock market roller coaster. Has anybody else experienced this? Tell me I'm not alone, because certainly the last couple of years, the last year or two, have been really, really volatile from a stock market perspective. Whereas in real estate, we really gain a lot of control and the ability to control the valuations of properties, because there's not only an intrinsic value to the hard asset of the physical real estate itself, but there is value in the business that is layered on top of that hard asset. And we have ways that we can control the valuation of that. Additionally, because we have more control of it, we also have the opportunity to gain cash flow, so ongoing passive income cash flow, as well as real estate is one of the best tax advantaged investments you could possibly make. And now we're not going to go into all the details of what the different levers are and what the different strategies are. I will plan on doing another session on that in another month in the future, but I just want to call out that it is such a tax advantageous investment that is something not to discount when you are looking at investments. So we've talked a little bit about real estate versus the stock market. Let's dive a little bit deeper and talk about apartments versus other real estate assets and why multifamily is more recession resistant. So in a recession, the assets, real estate assets have different levels of sensitivities to potential recessions and economic changes. For instance, if we're in a recession, people tighten up the budget, they don't travel as often. Retail stores may also shift to more online because they can't afford rent. I mean, we all just went through, right, this crazy pandemic, and we saw this landscape change before us in things like even Zoom, right? We were doing some Zooms in our business, but we weren't running our businesses on Zooms pre-pandemic. Now, we don't even need in-person meetings by and large. There's still some value in some of them, but we can really do so much more from a virtual perspective. Whereas apartments are valued differently and everybody needs a place to live. So they're not as sensitive to the inflationary environments or the recessions. Additionally, it's different how apartments are valued, and they are valued differently than what we value single families homes. So as we kind of talk about the difference between single family and apartments, when you want to sell your home, you got to look and see what did your neighbor sell their house for, and you don't really have any control over that, right? Whereas apartments, there's a lot more control because there's this little dial that we can turn that's called net operating income. And as we increase income and we decrease expenses, it increases the value of the property. Additionally, banks and lenders have favorable terms and they think favorably on apartments because they are income generating, which makes getting lending on them so much more attractive. And quite quite frankly, it's simpler to get lending on these larger apartment complexes. Diving in a little bit more to that little dial we just talked about, being able to, what we can do is force appreciation, which is again simply just increasing the income, the bottom line income, so the net operating income. I want to share an example of this. These are all like high level examples because I want to set that foundational knowledge and make sure we've got, kind of good understanding of what the foundations are. If we simply increase rents on a 100-unit apartment complex by $100 a month, we've added $120,000 a year. Now you might be thinking that that means the property value would go up $100,000 a year, $120,000 a year. But no, the reality is that because of the way these properties are valued, there's this major multiplier that is in play here. Whereas when we add $120,000 worth of income to a property, we're actually forcing the appreciation and the value of that property up millions of dollars. In this particular instance, it's $2.4 million worth of value that we add to the asset by simply increasing rents $100 a month on a 100-unit apartment complex. Pretty powerful. And that was an eye opener for me when I shifted from the single family to the multifamily space. And the main takeaway here really is that we're able to leverage this value multiplier to have a lot more control over our assets and our real estate portfolio compared to single family properties and then other real estate assets as well. So let's talk a bit about how it works. And again, I do want to preference, this is not an offer or solicitation. So if the next couple of slides, when I dive into kind of how it works in business plans and it starts to feel a little like, oh my gosh, is she going to pitch me something? I'm not going to pitch you something. It might just inherently sound that way. So I just want to be super clear there, but let's talk about how it works. So a syndication is simply the pooling of investor capital in order to acquire a large asset like a 200-unit apartment complex or 100-unit apartment complex I mentioned before. I myself don't have the capital to buy a 200-unit apartment complex by myself. I wish I did, but I don't. Most people don't. And I suspect you guys don't either, which is why we all can partner together as a team and invest alongside each other in order to make these much larger purchases and extract the value from these assets. There's also typically two types of investors in each deal. There's what's called a limited partner, who's also known as the passive investor, and then there's a general partner, also known as the active investor or deal sponsor. As a passive investor or a limited partner, which is likely much of you're interested in, how do I create passive income? How do I invest in real estate without being a landlord, not wanting to deal with tenants, toilets, and termites? Limited partners really benefit from the fact that they're able to leverage their capital and invest funds into a particular deal, but they don't make decisions on the deal, nor do they have to deal with the day-to-day headaches of managing the asset. So they receive that coveted mailbox money as well as a portion of the growth, and they're able to grow their wealth on autopilot. And we'll talk a little bit more about what this looks like, I think, in the next slide. Whereas on the general partnership side, so this is the role that I work in. I am an active real estate investor. So I work really on behalf of my investors and finding new deals to acquire, underwriting the deals, managing all aspects of the operation and renovations, and then executing the business plan on a particular deal through the entire hold period. So I am the active investor. I'm the one that is working with property management and handling any tenant issues, termite issues, or we recently had rat issues at one of our properties. So working on directing how we resolve any particular issues that come up and key business decisions. So what does a typical deal look like at a very high level? So our business plan is we typically acquire what we call class B or C properties. And properties and subsequently areas as well are typically broken into class A, B, C, and D areas. And it depends, it's kind of like simplicity, let's say nicest to not nicest. So class A is like your nicest property. It's your brand new construction. You've got the pools, you've got the gyms, you've got all the amenities in their newer buildings. Whereas a class D is really an area you probably don't want to drive through, certainly not after dark. We invest really in that sweet spot in the middle. So we're investing in class B and C properties in solid markets. So we focus on the Sun Belt with Florida, Texas, and Georgia being our primary states that we invest in. And we're looking for assets and we're acquiring assets that have really been mismanaged and they haven't kept up with improvements over time or haven't kept up with the operational improvements over time. So we have an opportunity to go in, renovate interiors, exteriors, add operational efficiencies in order to force that value, that appreciation we talked about earlier, to get the optimal returns for our investors. We're basically flipping the properties. So like you see on HGTV, they buy these ugly houses, they flip them, they're beautiful in the end. We're basically doing the exact same thing with these 100 plus unit apartment complexes, except instead of taking 3 months to do, it takes us typically 4, 5, 6 years to execute the business plan. And during that hold period, that 5, 6 year period, our passive investors are receiving cash flow distributions, typically on a quarterly basis. But then they're also going to receive an additional share of the profit once we sell the asset in that 5 or 6 year time horizon. And you may be wondering, how much money can I make doing this, right? You're not doing any of the work, but you're investing capital. Typically, we're looking at doubling investor capital over that 5, 6 year hold period. So if you put in 100,000, you get 200,000 out in total returns over the life of the property. That typically includes of 8 to 11% cash on cash returns. And then I mentioned earlier about the great tax benefit. Typically, we'll see tax benefits in year one of upwards to 60% of a write-off, which basically means that if you invest, again, all hypotheticals, if you invest 100,000, then it's typical that you'd have a paper loss of $60,000 because of the way real estate is treated and all of the advantageous tax laws in the IRS's code that you were able to then write off of other passive income, or if you qualify, potentially active income. But again, that's a CPA conversation for you. Some other things to know as you go through there, we've already invested in well over 500,000 apartment units, and actually we're closing on a deal today. And our portfolio is valued at over 65,000. So we are $65 million, my apologies. We're continuing to build a strong investor community. We've already got one, but again, with this forum, with Wealth Navigators, I'm looking to bring that community together of like-minded individuals, other high-level professionals who really want better than what Wall Street has to offer. And each property, we typically raise anywhere from $5 to $10 million from investors. And because we're doing these large deals, I mean, it's a business. So we are partnering with other general partnerships, teams, and other professionals in order to fill different roles within the general partnership team. And that could be roles such as signing on the loan docs with the banks, putting earnest money deposits down, or escrow as if you were buying a single family. We're also raising capital. So when we do have a deal that goes live, that deal is going to typically go out to a few thousand people, and there's usually only space for 100 investors or less, depending on how much each individual invests. And depending on the economy and the market where we're at, I've seen deals that, fully subscribe in a couple weeks, and then I've seen others that have taken a bit longer because of where we're at, kind of in the economy. But it typically takes about 3 weeks for a deal to fully subscribe. So it's definitely something if you're interested in. If a deal comes across your inbox, you'll definitely want to take a look at it and make a decision on that. 2023. It's already been a bit of a roller coaster for 2023, right? We just had all the bank fail. Well, I say all the bank failures, a couple bank failures, and both here domestically and internationally. We are still buying deals. I mentioned we're actually closing on a property today. We'll only buy a deal if the numbers make sense and we can get investors the returns that that our investors want. Again, kind of targeting that doubling the money in the 5 to 6 year time horizon. What's changed for us in 2023 than what we've been doing in 2021, 22 is we're looking at a lot more creative financing or deal structuring. The deal we're closing today is actually a seller financed deal. We've got another deal that we're very close on that is actually assuming debt from 2 years ago at like a 3.5% interest rate and bringing in the additional capital to nearly 80% loan to value, which is unheard of these days. So there are still great deals out there that we are finding, but it does take a bit more work. But that's part of our role as the general partners to be out there finding those deals and actively underwriting them. So how can you get involved? So if this is a right fit for you and your family's financial goals, there's three main ways that we can stay connected. First is through this forum, the Wealth Navigators. This is a monthly meetup that I'll be holding moving forward. The next date that we have is April 17th, Monday, April 17th. So go ahead and save the date on that. I encourage you also to invite a friend or a colleague or somebody else that you might be speaking with. Would love to have them join as well. The topic for that one is going to be on definitions and returns. So who can invest in, we'll talk about things like who can invest in syndications, what are the associated fees. We'll also look at a more in-depth return model. So see how that actually looks. And then I know there's a lot of new folks on here too. So if you're here and you're brand new, and you're not part of the Waypoint Investor Club. And what that means, it's completely free, but what that is it's our private investor community where we take a look at investment opportunities. It's where people who are interested in growing and building their wealth through apartments, where we kind of look at particular deals. So if that's something you're interested in and you're not already part of it yet and you want to join, here's how you can do that. Just scan that QR code. All that means is you'll fill out a quick form and then you'll be able to set up a call with me to talk. I mentioned at the very beginning, we're highly regulated by the US Security and Exchange Commission. So we do need to have a relationship with our investors, and I'm sure you'll have questions. So this is a great way for us to kind of set up time and chat there. So go ahead and scan that QR code. Also, I've had a lot of folks, again, asking about when is our next opportunity came out. Our last opportunity that we had live was at the end of last year. And you're part of the investor community. We are diligently underwriting and actively sourcing deals. We've got a couple deals that are pretty far in the pipeline. And if that's something that you're interested in, I noticed I totally missed the preferred investor list. So the preferred investor list, I'll touch on this real quick. If you're already part of the Waypoint investor community and you're serious about moving capital soon and you're actively looking at where you can place capital, I put together this preferred investor list, and basically all that is that's a list of investors who you're ready to move capital, and I'll pick up the phone and I'll call you as soon as we get under a letter of intent. That's not a contract, it's a letter of intent. And we'll just have a quick conversation about the market, about the particular deal, about the business plan. And what that does is that gives you the most amount of time to start thinking about it and analyzing it ahead of everybody else who will get access to the deal once we go under contract and send it out to our investor list. So if that's something you're interested in, just shoot me a message and I can add you to the preferred investor list. Now, I can't put everybody on the list. There's simply not enough time for me to call everybody. But again, if you're looking to move money soon and you're interested in it, shoot me a message and we can get you added. Next deal, again, mentioned we are currently underwriting stuff. And again, if you're not in the investor community, you won't hear about this deal because we do need to have a pre-existing relationship. So if you're interested in joining the investor community and learning more, scan the QR code. You also get this I have a 12-page financial freedom playbook. It basically goes through investing in apartments, questions to ask, terms and information as well. So great resource there.